All right, so let's segue into the second high-tech hub that our investors are buying, which is the in North Carolina, which is the triangle. They call it triangle. Is Raleigh, Durham, Chapel Hill, and you might as well include Charlotte, which is 100 miles southwest of Raleigh. It's sort of in the same metro, if you will. So as you can see, Apple is coming already, right? Major Apple campus is coming into Research Triangle Park. As you can see, Research Triangle Park is right over here. This is the huge tech hub, been growing for many, many years. And if you buy investment properties, our investors, if you want to buy within 10 to 15 miles right here, Research Triangle Park, it'll cost you like $450,000 for single family home, newer resales. You're thinking, hey, and I can't cash flow really? Yeah, kind of. You may get like $2,300 rent if you buy $450,000 single family home as an investment within 10, 15 miles of Research Triangle Park. You may have a negative of $200. It's not so bad. Some of you still should do it, right? In fact, one of our investors closed escrow a few days ago. She bought a $450,000 single family home about 20 miles from Research Triangle Park in Raleigh, which is around here, 20 miles away from the RTP, Research Triangle Park. And she's getting like $2,300 rent. So she understands the slight monthly negative, but she's focused on appreciation. On this Silicon Circle, I call it Silicon Circle, right? If you buy, the closer you buy Research Triangle Park, it'll cost up to $450K for a typical single family home. But if you want to buy like 30 miles away from the Silicon Circle, a little bit further away, for example, the areas that are good is like Morrisville and Cary and the northwest part of Raleigh. Those are within driving distance, 20, 30 minutes into RTP. And those prices around $400K. So if you want to buy, or $350K, right? If you buy a single family home cheaper for $300K, you have to buy a little bit further out, right? Further out on this triangle, like into Durham, a little bit to the northeast, or to Raleigh on the south of Raleigh or northeast of Raleigh. But still, anything within the 30, 40 mile radius is a good purchase. The rental market is strong. Obviously, you can cash flow at $350K, $2,200 monthly. You can slight monthly cash flow with 20% down. So not so bad. And then, of course, Charlotte is a little bit have a similar growth with Raleigh, which is Charlotte's right here, right? So anyway, similar pricing. Charlotte like $350K, renting for $2,200. You can cash flow at 20 or 25% down payment. So with that said, here's my recap on the triangle in North Carolina. So Richard, what are your thoughts about buying in the Silicon Valley of the East, Raleigh, Durham, Chapel Hill, and Charlotte with the Research Triangle Park? I can't hear you, Richard. You're mute.
If there's sadness in my voice, it's because I'm sad. I had the opportunity. I mean, how long have you been talking about Raleigh? How long have it's been at the top of people's tongues for, I don't know, 3 to 5 years now. And like a lot of you out there, I snoozed and I sat on the fence, and man, I wish I didn't. Because obviously Raleigh's exploded and is continuing to grow from here. And like you said, there still are opportunities to be a part of the growth. You may need to put in a couple $100 out of your pocket. But you're buying good quality assets in good neighborhoods as well. And typically you're paying down more than $200, $300, $400 a month in principal. So the net is still a positive a lot of the times once you factor that in. But yeah, if you have the opportunity to enter that market and be within $100, $200 of cash flow, I think it's a great place to invest. And, values have gone up really everywhere, right? And if you are going to invest in an appreciated market, you want to invest in strategic places. And obviously following tech and buying in areas where there's still a lot of growth happening in tech is a good way to hedge against, the prices being and the market being a little higher.
Yeah, absolutely. Yeah, that's right. Some investors are thinking, oh, the price is too high at $300,000, $350,000. And Richard, I mean, we're going to be asking, compared to what? If you think today these investment homes are too high at 300, 350K, I mean, compared to what? I mean, this kind of a comment are irrational, right? I mean, you're not thinking like a true investor. Too high compared to what? Compared to inflation, compared to gold, compared to a stock market. As long as you know a particular area in this high tech area, or continue to grow, continue to have in-state migration, continue to have a shortage of homes to rent and to buy for the foreseeable future. And if the rent, if a tenant is paying you $2,000, $2,200 to buy your investment home at 300K, you're good to go. You have cash flow. Okay, just ride the wave, ride the high tech wave into the future, because the chances are, long term, 5 to 10 years from now, you'll be thinking, if you didn't buy today, 5 to 10 years later, you could be thinking, oh, I should have, could have, would have. Richard, you and I have been in this business for a long time. 5 years ago, people at that time said, oh, investment homes high, prices too high. 10 years ago, our investors saying, oh, prices at time was too high. Now, fast forward to today, those prices will double, even triple in value in the past 5 to 10 years in certain market that we have promoted prior.